Good morning, good afternoon, good evening. This is Dr. Dabowski. I'm here to give you a short video on the accounting cycle, a summary and recap of chapters 1 to 4. This is going to review basic at a very high level, everything that's bigger concepts, and also review all of my mnemonics and acronyms that I've been using to help you try to remember some of the material. So again, I hope you find this helpful. This will be fairly short, less than 5 minutes. Enjoy. So let's go ahead and take a look at Lake Erie. Remember, Lake Erie was used to remember revenue recognition principle and the matching principle. Remember, Lake Erie, ERIE stands for earned revenue and incurred expenses. Revenue is only recorded when earned, and expenses are only recorded when incurred. Remember that the flow of the matching principle is that expenses always follow the revenues. The revenues have to be earned, and then any associated costs, expenses have to be recorded in the same period. The next acronym that we covered was dealer. Remember, this is telling us our debits from our credits. The debits are your D, your E, and your A. Dividends, expenses, and assets all have debit balances. That's how we increase these types of accounts. When we want to decrease them, we would have to credit them, do the opposite. On the other side of the equation are our credits, our liabilities, our owner's equity, and our revenue accounts. We increase those accounts with credits, and if we want to decrease any one of the liabilities, owner's equities, or stockholders' equities, or revenues, we have to debit them. Again, dealer helps us know our debits from our credits. Remember our PALs versus our TRED. Remember our permanent accounts. P stands for permanent, and there are PALs, our assets, our liabilities, and our stockholders' equity. PALs stick around for a long time and don't leave. Versus our TRED, which are our temporary accounts, our revenues and our expenses and our dividends. Like the tire treads get reduced to zero, so do our temporary accounts at the end of the period. So it's our temporary accounts that we close out into retained earnings at the end of the period. If you want to remember the accounting cycle, I want you to remember the acronym Mr. Clean. Remember that we talk about the measurement process, the recording of transactions and posting of adjusting entries. There are videos on these. There's the reporting process where we prepare our financial statements, also known as the communication process, MR. And then the C for Mr. Clean stands for the closing process, where we record and post our closing entries and zero out our temporary accounts, our TRED. The measurement process, as we said, is we record our external transactions and we post adjusting entries. The reporting process is we pull amounts from the adjusted trial balance onto the financial statements. The income statement measures our revenues minus our expenses or our net income. The statement of stockholders measures the changes in common stock and the retained earnings account. The balance sheet gives us our assets, our liabilities, and our stockholders' equity accounts. Remember, this is an equilibrium. And our statement of cash flows produces our cash changes throughout the year, where all cash flows, inflows, and outflows are broken into operating, investing, financing cash flows. Finally, we close out the temporary accounts to the retained earnings account, revenues, expenses, and dividends. Permanent account balances are carried forward, which are our balance sheet accounts, the assets and liabilities, and the stockholders' equity accounts. After we close out our temporary accounts, we have one final trial balance called the post-closing trial balance. It reflects the emptied temporary account balances after closing entries, and it is the starting point for the next accounting cycle. That's it, folks. Good luck in this online course. Hope you had a great time so far. Hope you're getting this material down. You can do it. Keep up the good work. Hope all these acronyms and shortcuts are helping save you some time.